Last week, China cut rates. Over the weekend, CPI came in weaker, but we're hearing reports that they're cutting gasoline prices. What does all this mean for the market?
It means some of the indications we're getting from the People's Bank of China about lowering rates, there is some concern. They obviously saw some numbers that are indicating a slowdown. So that means you need to reprice equities. Their market fell 2.5 percentage points coming into our market today. So it's not a surprise we're a little bit lower because they have been, in fact, the catalyst. They've been the only engine of growth throughout the entire world. The rest of the world has been able to export their economy into China, and it looks like that's becoming a difficult operation to undertake. The flip side is Russia just reported some good sales on automobiles for Ford. So maybe it's moving across the globe, but the fact of the matter, China is still the major force in the world, and when that slows down, it's not good for anybody.
And we're going to get a lot of other data points out of China this week, including Friday's GDP report. What are you expecting for the rest of the week from them?
Well, based on what we're seeing, I would anticipate obviously a reading below 8%. The odds-on money is at 7.5. I would not be surprised to see it below that number based on what we're seeing. Again, we've talked about the cuts in the gasoline prices, trying to drive their consumer market. That's been an operation, an area that the bank had traditionally was trying to stay away from without overheating the economy. It looks like, so that to me is a signal that maybe things are a little bit worse. Not terrible. I mean, we're complaining about 7.5% growth rate. That's pretty funny.
Much better than what we have here. Is it so surprising, though, that we're getting these weaker data points out of there? I think a lot of people had expected rates to be cut and the government to be accommodated over there.
Well, the issue, truthfully, is that no one's really sure what the numbers, when you get numbers from China, what they mean. You have the HSBC index on some of their manufacturing versus the government indexes. So we're not sure. But the fact of the matter is, they were slowing down. The question is how well their government managed the slowdown and if there would be any truth in it. So the market has to anticipate, and there's some other indicators that we use looking at shipment buildup. We look at buildup of inventory of coal and their iron ore to get an idea what's going on in the country rather than what the government's telling us. So no, it's not a surprise. The question is how well they handle whether we go for a hard landing or a soft landing, and then you have to interpret what's a hard landing in China versus a hard landing to the rest of the world.
Right, exactly. Thank you so much for your time.
My pleasure.
This market is fueled
Stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to